No one needs telling that the housing market has had an incredible year. Whether you're in California, Texas, or Ohio, the US, the UK, or Australia, as long as you don't live under a rock, you know that the housing market has increased at a ridiculous rate over the last year. And while some people will say it was obviously going to happen in hindsight, the truth is that no one predicted it at the time. Now, with house prices at crazy all-time highs, with unaffordability locking millions out from owning a home, and with the turmoil of the Delta variant, high inflation and stupidly low interest rates, the question on everyone's mind is what's next? Well, luckily for us, one of the biggest companies in the industry, Redfin, and its CEO, Glenn Kelman, just love to let us know what they think is going to happen, and that's what just happened. Glenn went on CNBC and gave us some insight into what's actually happening in the housing market, why it's happening, and what he thinks is in store for the next year. But really quickly, if you're new to the channel, then consider subscribing. We're putting out loads of content just like this constantly that you don't want to miss out on.
I was on your site, by the way, great site. I was on your site earlier before the show because I wanted to find a house. And I looked in California, Sacramento, and I found, I'm not knocking the house, 3 bedrooms, 1 bath, 1,100 square feet, listed at $389. It had sold 18 months ago for $255 and didn't appear to have any renovation inside. I mean, have you ever seen a market like this, even 2007?
You remember how long I've been in this market? I've done this for 16 years and I've never seen like this. So, especially in places like Sacramento, where people are fleeing the big city, they're willing to take longer commutes because they're only going into the office once a week or once a month, or not at all. And so properties are being bid up in the center of the country, and that starts in Sacramento. So you nailed it.
Well, sometimes a blind squirrel can find a nut as well, but I did happen to take a peek at where people were moving. My point is this: what kind of traffic are you seeing on your site? I mean, you are a leading indicator. If traffic goes up, home buying and home renting demand is going to heat up, because the first thing you do is look at a Redfin and figure out where you might want to look. What are you seeing right now, Glenn?
Well, the market was very hot through April, and then starting in Memorial Day, we saw demand take a step back. People went to graduations, they went on family trips, they just resumed normal life. And now in July and especially August, we are starting to see more sales come through. So it is not necessarily more demand, it's just actually more supply. Sellers have started to sense that there may have been a local peak at least. And so they are listing the home in a hurry. We are getting more listings out there. And as a result, it's just easier to put together deals, and we're getting more sales. And so June was a little softer. It almost returned to a normal market. And now July and early part of August, it's heating up again.
So what we just saw there is why so many people look to Glenn Kelman and Redfin to try and gauge the housing market, because they just have so much data at their fingertips. Kelman told us that yes, certain places have seen huge growth, and that it's mostly due to the results of the pandemic and the changes in our lifestyles that we've made. It all follows very logically. People can work from home more, they don't need to live so close to their place of work, they can move out further, so house prices in these cheaper, more remote areas have risen. But Kelman was a little bit disingenuous there, because he sort of made it seem like Sacramento and other cheaper, more isolated areas are the only places to see house price growth. And we know that isn't true. LA is a place that we know people are leaving in droves, but we still saw house price growth of over 10% last year. Austin, Texas, which is quickly becoming one of the largest tech hubs in the US, saw house price growth of 30% last year. These places aren't disconnected from society, they aren't particularly rural, yet they still saw some pretty crazy house price growth. Now thankfully, Kelman did give us some insight into what is actually going on behind the scenes. He let slip that house prices have actually peaked. Now he didn't say if house price growth has peaked or if house prices themselves have peaked, but either way, this is what we've been expecting. More homes are being built as lumber and other commodities have gotten cheaper and more available. More people are going back to their normal lives. Lots of people are being encouraged to get back into the office, and the savings rates have plummeted since the world has reopened again. The market has seen an influx of supply, which is meaning that lots of houses are selling, but not necessarily at higher prices. Kelman said that the market was very hot in previous months, but that it seems to be cooling off. Perhaps as people are spending their paychecks instead of saving them, less people can afford a hefty down payment. Maybe people are less keen to move out to cheaper areas like Sacramento because they might have to take a pay cut when they get there. This is all information that we don't necessarily have access to now, but we will soon enough.
Yeah, and you're seeing things, no contingencies. I will forego an inspection. I will pay all cash. Or I saw a house listed, only all cash offers would even get a tour of the house. I mean, that's the kind of stuff that we're starting to see right now. How long, Glenn, do you think this truly can last?
Well, I think it can last a little while longer yet, because the people who are moving from California were paying $2 million for a house there, and they're going to Ohio. So an $800,000 house seems cheap. Home prices in Idaho could triple and seem like a deal. People are using monopoly money from coastal cities to buy properties in the center of the country. And the reason that folks don't want to risk an appraisal, don't want to take borrowed money, is because they know the appraisal is going to come in low relative to all the bids. And so there is no check on reality for the cash buyer. What they bid is what they pay, because the lender doesn't have to underwrite it. So that's why the market has been a little bit bonkers. But I do think we are starting to see just a little bit of cooling in prices. About 5% of listings had a price drop over the past few weeks. That is a high for 2021, and it has approached 2019 pre-pandemic levels.
So Kelman made it quite clear that while the market may appear to have slowed down, he doesn't think that the trend that has merged over the last year is about to reverse. He thinks that people moving from expensive areas like California or New York to cheaper areas like Ohio is going to continue, and that will feed into this bubble. He thinks that those who have the money will continue to make all cash offers, so they won't be limited by the banks. And from their point of view, where spending over $1 million to get a 2-bed apartment is normal, anything in these less expensive areas is seen as a good deal to them, so they don't care about overspending. That being said, Kelman did mention that more sellers are starting to reduce their listing prices. Sales numbers have decreased as well, so there are signs that the market is cooling. My only serious problems with Kelman's statements are, firstly, how many more people are going to be moving from expensive coastal cities to more rural areas, and secondly, are there any other ulterior motives at play? I don't know how many more people are going to leave the expensive cities. If they've continued to live in California or New York for the last year and a half, why would they want to move away now? Lots of companies like JP Morgan and Amazon are saying that they want employees back in the office, and if they do work remotely, they're going to have to take a pay cut. I personally wouldn't be surprised if we see the number of people emigrating away from these high cost of living, but also high wage areas to Ohio, for example, start to fall dramatically. My second concern is that Redfin want the housing market to continue to boom. Their share price has increased dramatically since 2019, but has had a tough few months as investors have started to worry about the housing market slowing down. It is in both Kelman's and Redfin's interest to keep optimism high, to keep people buying and selling their homes, and not worry investors. I wouldn't expect Kelman to say that the bubble is about to pop, even if he had the data to prove it, and you shouldn't expect that either. When listening to people like this, we need to take what they say with a grain of salt. We need to consider what their motives might be, if they're actually telling the truth, or if they're being held hostage by their own jobs. Personally, I'm not too sure if I do see the market crashing anytime soon. The Fed is continuing to purchase mortgage-backed securities at a rate of $40 billion every month, and they've indicated that they're willing to continue buying them for the foreseeable future. They are also determined to keep interest rates low, to make sure debt isn't too expensive and people can afford to pay off their mortgages and buy homes at these crazy levels. They are turning a blind eye to inflation, which in nominal terms means housing prices could continue to rise at seemingly unsustainable levels. What seems most likely, but not at all something that I'm convinced of, is the idea that inflation will remain high for the foreseeable future, and that while house prices might continue to rise in nominal terms by maybe 3 or 4% a year, in real terms they will fall and return to more reasonable levels. Put simply, if inflation sits at 8% and house prices only rise at 3%, then real home prices, the value that actually matters, would actually be falling by 5% every year. Something that would actually increase affordability and would reduce leverage in the market, but in a way that wouldn't necessarily scare off home buyers, that wouldn't frighten investors, and certainly wouldn't cause a worldwide recession like we saw in 2008. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. There are also links down below in the description where you can get a guaranteed $25 from crypto.com. up to $250 in free Bitcoin from BlockFi, and up to $2,300 in free stocks from Webull. There's also a link to the brokerage that I use most of the time called eToro that you can check out if you want. Thanks for watching. Until next time.